So in today's video, I want to give you guys a little bit of a contrarian view to everything that's going on with Tesla stock right now. And the reason why is because everywhere I seem to look, all the news outlets, all the media, all the analysts, they all seem to be extremely bearish on the stock. And when looking at Tesla's short sellers in particular, they seem to be in a little bit of a state of euphoria, meaning that they think nothing can go right for this company, and many of them are fully convinced that Tesla as a company will 100% be going bankrupt within the next few months or even within the next year. And this is actually a sentiment that I see even across social media. When you look at YouTube videos about Tesla, when you look at article posts on the internet about Tesla stock, I see a lot of people in the comment section being very aggressive about Tesla just going bankrupt and just going to $0. And they all seem to have this kind of shared opinion where they think that there's just no upside potential. It's going to zero and they're so convinced about it. And it's hard for me to look at them seriously or take them seriously because I really do feel like a lot of these people are Tesla short sellers. If you didn't have these kind of financial ties to the stock, you probably wouldn't be acting in this way. If you were just a normal Tesla bear, which by the way, there are normal Tesla bears, and I've actually had a lot of criticisms about Tesla stock myself. It's one of the reasons why I still consider it a speculative play and not a genuine investment, because they're not sustainably profitable. But normal kind of rational minded Tesla bears wouldn't be going around being so aggressive, calling people morons for investing in the stock, insulting people, using vulgar language, all these kinds of things. And I see this happen everywhere. And I've even had it myself, and I can't really show you screenshots because I might get demonetized, because they literally go all out in some cases. But having said that, I don't necessarily have anything against Tesla short sellers, and I may not like the practice myself, and it's not something that I do myself, but I realize that it's just kind of the way the game is played, and it is what it is. It's not really something I care about. But there's something that you have to understand, and that is that Tesla short sellers are making literally billions, with a B, billions of dollars off of the destruction of Tesla stock. And so in today's video, I want to show you guys why it's so important for them to get Tesla stock to go as low as possible, even if they don't really believe deep inside, if they don't really believe that Tesla as a company is going to go bankrupt. They need to do everything they can to spread as much fear as possible and kind of manipulate the market and get Tesla stock to keep sinking. And so we're going to look at the numbers and look at the reasons why they're doing this. And I also want to talk a little bit about the analysts that are now all of a sudden giving these bear cases where Tesla is pretty much going bankrupt in the scenarios that they're giving. And I want to kind of give a counter argument to some of their points. So this should be just kind of a fun video in general. Make sure you hit the like button if you enjoy these little kind of case studies. Maybe I can do these on some other videos as well. Leave suggestions down below. But with all that said, let's go ahead and get started. What's up everybody, my name is Ale and welcome to my world of stocks. I hope you're all having a great day. Let's go ahead and start by taking a look at how much Tesla short sellers are actually profiting off of the destruction of the stock. Actually, before we look at profits, let's first take a look at how much short sellers have been losing in Tesla stock. So when looking at mark-to-market profits of short sellers, which by the way is just a method of valuing positions to determine profits and losses, we can see that according to S3 Partners, Tesla shorts actually lost $400 million in 2016, over $3.5 billion in 2017, and $1.4 billion in 2018. By the way, 2018 was the worst year for the market in the past decade, with the Nasdaq dropping 4%, the Dow falling 5.6%, and the S&P 500 dropping over 6.2%. Yet Tesla's short sellers still found a way to lose $1.4 billion that year, bringing their 3-year total to a massive $5.3 billion loss. That is an unbelievable amount of money, and we're talking literally billions of dollars that shorts have been losing, so that would undoubtedly have very detrimental effects to their lives, and you can see why they would take it so seriously. However, 2019 has been a completely different story, as Tesla stock has been getting absolutely crushed, especially in the last few months, but overall Tesla is down close to 50% this year alone, and of course that drop has led to short sellers flooding right back into the stock, as you can see on this chart here, that shows the dramatic drop in price in correlation with the massive and dramatic increase of short interest. In fact, Tesla's shorted shares have increased by around 13 million shares so far this year, an increase of well over 50%. And while Apple continues to be the most shorted stock in terms of short interest, it's really only because Apple has billions of outstanding shares, while Tesla is only in the millions. So the short interest percentage of float, meaning the amount of Tesla's publicly available shares that are shorted, is almost 30%. And that's despite being the second largest shorted stock in the United States. And at nearly 30%, it's shorted an incredibly larger amount than the other top 10 most shorted US stocks, and it's not even close. Now, going back to the short selling profit and loss chart, let's add this year's profits to get a better visualization of the entire picture. Now, this month alone, Tesla's shorts have made over $1 billion in profit and $3.88 billion so far in 2019. That's almost $4 billion of profit just in the past 5 months, which is pretty insane. So in my opinion, right now, there is clearly a massive short attack going on with the stock in a coordinated effort to make Tesla sink, because you have to keep in mind that despite being up almost $4 billion this year, they still haven't recuperated their losses of over $5 billion in the past 3 years. So when I look at the mass media, social media, all the comments and all the different analysts giving ridiculous price targets, I see nothing but overwhelming negativity in an effort to keep the short going. And I want to address some of these analysts really quick who keep giving these so-called bear scenarios where they target Tesla's prices at ridiculously low price points, citing incredibly weak vehicle demand and poor financials. These include Morgan Stanley giving a bear case of $10, Accipiter Capital saying it will go straight to zero in full bankruptcy, and Citi now joining the fund by giving their own bear case of $36. Well, for starters, Morgan Stanley also gives a bull case of almost $400, while Citi is willing to go as high as $760. So basically, no matter what happens with the stock, they called every possible scenario accurately. If the stock goes to $0, the company goes bankrupt, and stock goes to $0, they called it. If it remains at a more reasonable price target, they called it. And if the stock just takes off to the moon at really high prices, well, they somehow magically called that too. In any case, the fact remains that a lot of these people and many others seem to be overwhelmingly bearish on Tesla stock right now. And I think there's a few reasons for that. Number one, we just talked about it. It's worth billions of dollars for short sellers to be shorting the stock and profiting off of it. And they were making a lot of losses in the past 3 years, so they're still kind of recuperating their losses. So it's worth a lot of money to them, and money can get people to do a lot of drastic things, like obviously being bearish on a stock is kind of an easy one. Number two is that institutional investors, hedge fund managers, they probably have their own plays on it as well, obviously shorting it, maybe using different kinds of options. But also, if they can get people to sell out and drive the stock lower, then they can buy into the stock at much lower prices as well. So that could also be something else that could potentially be going on. And then number three is that Tesla is an industry disruptor. And so in the automotive industry, where these companies are heavily reliant on oil and traditional ICE vehicle manufacturers, these are all very big players. There's a lot of money involved. And so a company like Tesla coming along and being a complete disruptor, let's call it what it is, EVs are a complete disruption to the traditional automotive industry, and it's very likely the future that we're headed towards. You know, they're going to see something like Tesla as a huge threat, and anything they can do to kind of keep it down, driving the stock price down is a great way to do that. They're going to do it. Now, throughout all of this negativity, there are two areas that I see all of these bears and short sellers completely agreeing. And one is incredibly weak demand, which is what they're all saying. We saw a drop off in demand, but they're saying that it's just weak, like very weak demand. Like it's just non-existent to the point where Tesla can go bankrupt because they just have no demand for their vehicles anymore. So, okay, apparently the public doesn't like Teslas anymore. So we'll take a look at that, which is the area that I completely disagree with. And then the second area is that Tesla's in a lot of financial stress, and they're in a difficult financial situation, and that one I do actually agree with. So let's take a look at both of those. Okay, let's start by looking at the very difficult financial situation that Tesla's in. Now, as of their last reported quarter, they did still have over $2 billion in cash and almost $8 billion in current assets, but even that large amount isn't enough to cover their current liabilities, let alone their massive long-term debt. which when combined, you're talking about nearly $20 billion of debt that is well over double their current assets. Now, to be fair, I don't think that their last balance sheet from their last quarter includes their most recent raise of capital that I believe was around $2.7 billion. So if we add that to the current assets, then they would at the very least be able to cover their short-term debts, which is a little bit better, but they're still kind of in a difficult situation. In any case, as a result of the poor balance sheet, Elon Musk is implementing new cost-cutting initiatives that he refers to as hardcore, as he even estimates that the company will run out of cash within 10 months if they continue to burn through it at the rate that they did last quarter, where they lost around $700 million after coming off of 2 rare quarters of profitability. And this is despite the recent layoffs and capital raises to help strengthen their cash position. So if Tesla does survive through this rough patch, any future raises of capital will likely dilute shareholders even further, and that could be looked at as a negative. So don't get me wrong, this is a major concern and it is a fair argument coming from the bear camp, one that I actually do agree with, but I also see it as a rough patch that they can get past and return to profitability in the future. And because I think that they have so much upside potential, so much future potential, growth potential, I'm willing to take on the additional risk from their financial situation right now for the possible upside in the future. But it's still risk, and it's something that keeps it as a speculative play for me and restricts how much I can really invest in it. And for that reason, I really don't want to turn Tesla into a bigger position than at max 5% of my portfolio. Now, when looking at the second argument from this whole kind of negativity bubble that came up on us within the last few months, that really has to do with weak vehicle demand. Apparently such weak vehicle demand that it will drive Tesla to bankruptcy. And when looking at why they're saying these things, it's really based on the fact that quarter over quarter vehicle delivery numbers declined sharply, very sharply, in this latest quarter. But in my opinion, it's not a fair judgment to judge Tesla on just a single quarter, because we had essentially a perfect storm of issues within that time frame. For one, they had huge logistical issues because this was the first quarter that they were delivering the Model 3 overseas into the European markets and into China. So there were a lot of issues that came with that. In fact, 10 days before the quarter ended, they had only delivered half of their orders, so a bunch of their deliveries had to be pushed into the next quarter. Number two is that we had some very difficult macroeconomic conditions. Out in Europe, we had several countries going through recessions recently. In China, their economy is plummeting, and the whole trade war between the US and China isn't helping that situation out either. And number three is probably the most obvious out of all of these, yet I don't see any of these analysts, any of these media outlets, I don't see anybody talking about this, and that is that the automotive industry is extremely seasonal. Yet all of these analysts are basing their bear thesis on the fact that we saw a drop in vehicle deliveries quarter over quarter, but they don't dare to look year over year. So I created a few charts and I'm going to show you why I think they're wrong when looking at vehicle demand for Tesla. Now, this first one shows deliveries by quarter, and while you do see a very sharp decline in the first quarter of this year, it's really coming off of a gigantic climb the 2 quarters before that. And given the fact that these analysts are supposed to be familiar with the stock market, I find it very strange that they don't think a pullback, or what we generally refer to as a correction, is actually a pretty normal occurrence when your numbers suddenly skyrocket in this fashion. So that begs the question, why did we see the surge and then the correction? Well, there's a couple of obvious answers in that production, especially for the Model 3, was finally ramping up heavily last year, with the third and fourth quarter seeing production numbers up over 3 times higher year over year. And another obvious answer is that the federal tax cut for Tesla's EVs were cut in half from $7,500, so you essentially ended up with a ton of pent-up demand for the Model 3, a gigantic ramp up in production, and an expiring subsidy for EVs that altogether sent Tesla's delivery numbers skyrocketing at the end of last year, before correcting back down once the subsidy was gone and Tesla ran into huge logistical issues that we discussed earlier. But even with all of that, you're still talking about an automotive industry that is heavily seasonal, and it doesn't really matter which country's chart you look at between the US and China, as the answer is always the same. Here in the US, automotive sales take a huge dive in the first half of every year, while the second half usually sees a big surge with the highest peaks. Again, the story is literally the same for China, with the biggest lows being at the start of the year, while the biggest highs are all towards the end of the year before falling off a cliff. So what this tells us is that maybe judging Tesla's numbers quarter over quarter is probably not as smart as judging them year over year. But of course, the mass media and the Tesla shorts refuse to look at these numbers, because if we convert their deliveries to year over year figures, this story becomes a little more interesting. In fact, the non-existent demand that shorts keep screaming about was still an increase of over 100% year over year. Let me repeat that, 100% in a seasonal industry in what is usually the weakest quarter of the year, yet they still grew deliveries by over 100%. And in the 2 quarters before that, that is generally the strongest time of the year, their deliveries were up over 200% in each of them. Sure, there's a slowdown of growth in this latest quarter, no one is denying that, but you can't ignore all of the issues I mentioned and the fact that the industry is seasonal. And finally, I just want to show you guys one more chart here, and this one is from Clean Technica, but it shows how deliveries for the 3rd and 4th quarter of 2018 were mind-blowingly higher than all the previous years that were so much closer together. As you can see, all those lines kind of packed together. And then in Q1 of this year, that all the analysts were saying that it showed horrible demand, you see that it was actually much higher than all the previous years too, all of which broke record highs. So overall, the trend of demand is still very much going up and not down like everyone is claiming it to be. So in conclusion, I still think that Tesla stock is a speculative play because they have a lot of financial issues and they lack sustainable profitability, which is something that I think you have to have if you want to consider a stock a reliable long-term investment other than just a speculative play. But at the same time, Tesla still has a lot of future potential, a lot of growth prospects, and anybody who is ignoring the fact that Tesla is growing in terms of sales, deliveries year over year by very high rates is being a little closed-minded. So I think taking a more rational kind of middle of the road approach makes sense with Tesla. When I see bulls saying that they were investing all of their money into the stock because it's going to skyrocket, and then I see shorts and bears saying that the company is going to go bankrupt and nobody's even going to be willing to buy them out, it's just going to go straight to $0 and everybody's going to lose all their money. I'm just seeing 2 extremes that are not being reasonable. In any case, when looking at my position in Tesla stock, I'm only really willing to invest around 3 to 5% of my overall portfolio in the stock for the reasons I just mentioned. But as far as the stock price kind of going down and dropping, I've been able to add to it, lower my cost basis, and I've actually been buying fractional shares through M1 Finance. I'm not really a big fan of M1 Finance, but I like the fact that they have fractional shares, so I've been taking advantage of that. And so I've been buying slowly over time, lowering my cost basis, and it's honestly been great. Like, a lot of people leave me comments saying, oh, how does it feel losing all your money in Tesla? It's like, it's only about 3% of my position. I think I just barely passed 3%. Yeah, I think I might have more than 3% now. But, you know, if the market has a bad day, I could lose 3% like in one day, you know, so it's really nothing to me. But anyway, I know that a lot of other people would also say, well, aren't you catching a falling knife by buying at these lower prices as it continues to drop? But you have to understand that we just fundamentally disagree here, because as a company, I still really believe in Tesla as a company. So if you see it as a falling knife and you think it's just going to go into bankruptcy, which even then I think it would get bought out well before it goes into bankruptcy. But as a company, I still really believe in Tesla. So in the long term, if my bull thesis works out, I'm going to love the fact that I got to average my cost down to these levels, because in the future, I expect it to be worth a lot more. And again, you have to just accept the fact that we disagree here. Some people think Tesla is a horrible stock. I happen to think that it'll be a good investment in the future. Well, that's just my opinion. And one last thing I want to mention is that if any kind of good news comes out, we could potentially see a very big short squeeze here, because it is a heavily shorted stock at the moment. So anyway, we'll see what happens. I hope that you guys enjoyed the video. I hope I didn't ramble on too much. Thank you so much for watching. If you enjoyed the video, make sure you hit the like button, subscribe if you haven't already, and I'll catch you guys in the next video. Take care. Bye-bye.